It's time for a look at Rick Rule's Pro Picks. This segment is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, Rick, let's get into these picks. The first one is ARC Resources. What's the play?
I would suggest that ARC Resources is all seasons the best managed energy company in Canada. They started in the financial side, went to the oil and gas side, very, very disciplined, very, very competitive, just superior human beings. When they were in the finance side, I used to try to compete with them, unsuccessfully, by the way, which really raised my appreciation with this group of people. As I say, I believe the best run independent oil company in Canada and one of the best run in the world. You start a portfolio with the best of the best. And in the Canadian oil and gas sector, ARC is the best of the best. Maybe not the biggest upside in Canada, but the best juxtaposition of upside with limited downside.
So let's talk about the role it plays in your portfolio. It's already run up so much over the last couple of years. And it sounds like you're saying, don't look at this if you want to potentially double your money, that it's just like a stable part. If you're a believer in the energy trade, this is a safer name.
It's a safer name, but make no mistake, I think the Canadian oil and gas sector is going to re-rate.
What does that mean for ARC Resources? Like if you were to put a multiple on it?
I would have no trouble at all seeing ARC as a 3-year double. No trouble whatsoever, because I actually believe the Canadian oil and gas sector is going to re-rate. I suggest to you that the hate that was described in your mailbag is going to dissipate and be replaced by love.
Is that the view, irrespective of what happens to the underlying price of commodity? I mean, obviously, if it implodes, I know that that's going to dent the thesis. But let's say we hang out in this range where we are right now with oil prices.
That's great. Let's do that. When you look at how the earnings and cash flows of oil producers are valued relative to other sectors in the market, what you see is that the beliefs of the big thinkers of the world, the Angela Merkels of the world, the Trudeaus of the world, the Bidens of the world, that noted energy physicist, what was her name? Greta Thunberg.
Greta Thunberg, yes.
The big thinkers of the world have tried to tell us that peak oil demand occurs in 2030 or 2032, which means that they've assigned no net present value to tail cash flows after 2032. I believe peak oil demand occurs in 2065. And I believe that over the next 5 years, the discount that's applied to the market capitalizations of oil companies, as the market recognizes that demand for hydrocarbons will continue for 35 or 40 years, I believe the whole sector is going to re-rate. I think that Canada will re-rate even more because the principal impediment to the Canadian oil and gas industry is Canada, is the political leadership of Canada. Companies in Canada that have been constrained from shipping oil and gas as a consequence of U.S. politics, as a consequence of the Biden administration's de facto reduction in funding and permitting oil and gas transmission, I think is also over. And so I think that Canadian oil and gas will enjoy better access and egress through the United States. I think that the Canadian oil and gas sector will suffer less headwind from Ottawa. And I think that the entire oil and gas sector on a global basis is going to re-rate as investors come to understand that peak oil demand doesn't occur in 2032, but rather in 2065 or 2070.
Let's get to how this applies to your second pick, Tourmaline Oil, a little bit different kind of exposure. And I feel like there's an adage around Tourmaline, like you don't get fired for recommending Tourmaline. Like there's a lot of support around CEO Mike Rose, what he's been able to build. And, of course, it helps investors love those special dividends.
Tourmaline is just an extraordinarily well-run company. There are some groups of people who do things better than other people. If you look at their recycle ratio, which is the amount of new oil and gas that they can discover based on the margin that they've achieved from their existing oil and gas, if you look at their return on capital employed, if you look at the fact that they are able to fund new project investments and fund sustaining capital investments when most of the industry isn't funding sustaining capital investments, and at the third and in the third case, simultaneously be generous to shareholders. This is just an extraordinary company. I don't consider it to be a particularly conservative pick. I consider it to be an investment in a collection of assets and a corporate culture that guarantees superior performance relative to most of its peers for at least the next 5 years. Among other things, it's a fun place to work. Great engineers and great geologists like to work for great engineers and great geologists. This is simply a cultural fact.
Do you see more deals on the horizon? Bonavista, Crew Energy, recent big deals. Do they just work on digesting that, or do you think that they can continue to grow by acquisition?
I think that'll be a function of the market's acceptance of Canadian oil and gas. If the Canadian oil and gas sector continues to be cheap, if Tourmaline finds that they can buy potential faster than they can build potential, they will do just that. They are absolutely agnostic as to how they make you money. They just want to make you money. And I want to encourage them to do that in my case.
Well, let's talk about your third pick, Peyto Exploration. Is it a bit more of natural gas exposure? And it looks like natural gas has woken up from its long sort of hibernation. Are you bullish on the prospects of natural gas, and how does Peyto fit into that?
I mean, the current ACO, Alberta gas price is plenty for them to make money. But I think it's going to go up. I think, in particular, the fact that they don't have the federal headwinds against them, and the fact that with or without Trump or Trudeau, the infrastructure is now in place to begin to move gas out of the Western Sedimentary Basin and liquefy it on the Pacific and send it to Asian markets, means that the gas bubble that's built up in Alberta, the amount of gas that couldn't be sold, is going to decline to the benefit of high quality natural gas producers. And Peyto is probably the highest quality pure play gas producer in the Canadian scene. I also believe that people don't understand the extent to which Trump may be able to debottleneck US transmission, meaning that even if Canadian gas can't be transported to the Canadian eastern seaboard, liquefied and sold into Rotterdam, that same gas will be able to move into US markets and in fact find a home in Europe. There is a business case for Canadian natural gas.
It's got nearly an 8% dividend yield if you buy it here, trading at around 11 times earnings. Is this, a value slash income play, or do you see it as a price appreciation play, or both?
Ironically, to the extent that the upside exists in Canadian natural gas sales, some of the money that is now being paid in dividend will likely be invested in productive capacity. So at the same time that their outlook over time increases, it might involve a transfer of benefit from the shareholders in the very near term to continuing to rebuild the business that was destroyed in Ottawa.